I have an underrated stock that no one's really talking about that's on a massive bull run and swinging a lot higher per share. And because no one's talking about it, I want to bring up this stock so you can make a smart investment in it. You guys like deep research and analysis, so in this video, I'm going to be breaking down my prediction of the next AI stock set to explode. I think the stock can be the same level as Nvidia, so this is a really big deal. It's going to be important for you to understand the business and how the stock is being impacted by the market right now. So let's not waste any time. Let's jump right into it. And the stock is going to be Alphabet. Alphabet is currently trading at $234 per share. And over the last 1 month, the stock is up 15.87%. Now, what's interesting is this stock is already a lot bigger. So it's not as sexy as some of the newer stocks that are really exploding in the market. But if you think about it, Google is literally at $2.8 trillion right now, and it's headed for a $4 trillion market cap. So there's actually a ton of money that you can make without really getting lucky or taking on a lot of risk. Over the last 6 months, the stock is up 33%. And the most important thing when you make an investment is understanding why you're making this investment and where it's going. And the reason why I think that Google is going to be a $4 trillion company, first and foremost, is search advantage. Okay. They have, for more than a year, Alphabet has faced the looming threat of the Department of Justice antitrust case. That has been keeping the stock down. The worst case scenario could be absolutely devastating, forcing divestitures of Android or Chrome, or even the end of its lucrative search partnership with Apple. See, Google makes money through advertising and ads, and where those ads are able to be placed is very important. If they lose their relationship with Apple, then the stock is going to absolutely get crushed. But what ended up happening is instead, the outcome was way more favorable. Alphabet kept control of both Android and Chrome, and it still has the ability to pay Apple and other partners for default search placement. The main adjustment is that these contracts now need annual renewals instead of being locked in for longer periods. See, the government wanted to break up Google. It was a little bit too strong. However, the money is pretty simple. Just like Nvidia has, been making money and now they're able to sell into China and there was something figured out, right? The government said, "Let me get a piece of that. I want to get a piece of Nvidia." Well, same thing with like Google. Ended up being completely okay because there's so much money being made, so many jobs being created in America that it's a good thing that this company is absolutely killing it because it's an American company. So what this means is that Alphabet's greatest opportunity is still in front of it, and its greatest competitive advantage right now, and why I think it's going to be a $4 trillion company, is this unmatched distribution. It remains completely intact. Chrome captures nearly 70% of the global browser market, and Android runs on roughly 3/4 of the world's smartphones. That means you're probably using Google yourself. And on top of that, Google Search is still the default option on Safari, thanks to its revenue sharing deal with Apple, giving it reach across most of the existing other users. So, because very few people even bother changing their default browser or search engines, billions of users are essentially locked into Google Search by default. It's just the default, and their default is going to be making them a lot of money. Far from being disrupted by AI is also very important for me because if you think about it right now, Palantir, Nvidia, Microsoft, a lot of companies are making money because of AI. So I want to be on the AI trend, not against it. And Google is on the AI trend. So search is actually being enhanced by AI. Over 2 billion people now use AI overviews each and every single month. And I noticed this myself recently. Like I was like typing in, I'm in Eastern Europe, and I was just curious, like, does red caviar or black caviar have more nutrition? So I like typed in, which one is better, right? What's the nutrition content of red versus black caviar? And yeah, Google gave me an overview. They're like, well, there's this amount of protein and this amount of omega 3s and, this amount of nutrition in it. And it was really interesting how the AI overviews is pretty fast. And one reason that I was personally bearish on Google was because I wasn't using it as much because I was using more ChatGPT and asking ChatGPT various questions. But now with AI overviews, I think that Google is on trend again. Like they figured out a way to not lose people in other, search basically. So they can keep search strong by using AI. So over 2 billion people now use AI overviews each and every single month. And Alphabet recently launched a global rollout of AI mode, which lets users seamlessly toggle between classic search results and controversial chatbot style answers, right? So these features are now cannibalizing search a little bit, but they're also really massively fueling it. In fact, Alphabet ended up reporting accelerated search revenue growth last quarter, which ended up being the biggest game changer and why the stock went up. Because the cannibalization they're getting from using AI is completely okay, right? Because people are still have lots of questions and they're searching a lot. And now they have two different things that they can do. They can have the AI overview or they can basically just do traditional search. So the distribution moat, like talking about business and the stock. First of all, like fundamentally the strongest thing about the stock is that they have a really good PE ratio, right? We see that PE ratios for something like a Palantir is 500. We've seen PE ratios for Tesla well over hundreds, right? But for Google, it's only 24.94. It's like right around 25. They have a very small dividend. And overall, this is one of the cheapest valuations for a Mag 7 stock, right? So if I go here, 1 year return is very strong. Valuation metrics here on PE is good. The Ford PE is also going down, which is a good thing, right? Ford PE, by the way, is essentially like in 1 year, given that earnings will be what they are based on expectations from analysts, what will the new PE ratio be? So the new PE ratio is falling from 25 down to 22. That's a good thing. That means that the stock will be cheaper on a price to earnings ratio. And the price to earnings ratio is how much money you're paying divided by the earnings of the company, right? So the lower the number, the better. And essentially here, 22, very amazing. Price to sales is at 7. They also have a ton of cash on their balance sheet. They have $95 billion. Very, very amazing stuff. So they're stockpiling a lot of cash. They're going to be able to invest in all kinds of things, right? They have too much money to even know what to invest in right now, but that's a good thing. You want to have a lot of cash on the balance sheet, and that just means that you're a very profitable company. Clearly, the profit margin is also like 30%, which is very strong for Google. Overall, they've been beating earnings. So like when people only make videos on Nvidia and Palantir and SoFi, myself included, because those are like obvious plays, I wanted to give you guys a new perspective and give you like a new stock that really nobody's talking about. Nobody's gonna give you the boring stuff, but the boring stuff works. Just like straight up, the boring stuff will make you a lot of money. That's my goal, to help you guys make a lot of money, to get you closer to retirement and to build wealth. And Google is an absolutely amazing stock to build wealth on. The revenues are strong, the earnings are strong. You can actually see that most analysts actually have it as a buy. And currently it's a little bit above average analyst expectations. Analysts are typically lagging behind, and then they readjust their price targets higher. So for me, I would say that we're going to be able to hit $4 trillion in market cap. It's really just a question of like what happened in 16 months, what happened in 21 months, what happened in 27 months. It's going to be like around that time frame that we see Google rise to the $4 trillion market cap level. And over the last 1 year, it's up 50%. So, I mean, technically, you could even see the stock do that again if all things go according to plan. And the stock could be basically knocking on the door of 4 trillion in just 1 year, right? In 12 months. So looking at the competitive advantages and what you need to know on why to hold this stock is really there's 5 things or so. The first one is distribution moat. So Chrome and Android dominance. Nearly 70% of the web browsing and 75% of the smartphones are dominated by Google. That means that Google controls the gateway to the internet. You guys want to be invested in a company that has control. Look, Google has control as the gateway to the internet. That means that they have an influence to make money from start all the way through the whole process of using the internet. I mean, man, that's crazy to even say. That's insane to even say. Like they control the gateway to the internet. You know how big the internet has become. Like this feels like I'm in 2005 telling you the internet's going to be big. It's like this is the moneymaker. All the remaining users is easy for Google because they have the Apple deal. Also, just behavioral lock-in. Most people don't change defaults, so billions will continue to Google by habit because you're locked in. Like it's a habit. So you guys know how strong habits are, whether it's drinking lots of soda or smoking or being healthy and hitting the gym. Most people stick to their habits. Habits are harder to break for the most part, and they take a while to form. So a habit is a very strong way to make money off. All right, so the next thing is AI integration into search. So I mentioned that as well. So instead of AI replacing search, Google is absorbing AI into itself. So there's AI overviews, which already used by 2 billion people each and every single month, and AI mode, which lets users switch between traditional search and chatbot style answers. This basically ensures that Google stays the platform where people will seek all their questions and get all their answers. So yeah, AI search is what I was like sort of bearish on for some time, and now I'm just going to come in and I'm going to say it on the record. Google is going to make a ton of money. So I'm planning to invest in Google. Like $234 per share, I think is pretty cheap, although we're sitting at very, very high levels. The hardest questions, the hardest pessimism from investors is now behind us. So going forward, there's going to be a lot of positive movement. You guys can also see here on recently viewed, Robinhood had a great performance. So another stock that I absolutely love. This video is about Google, but just quick mention, Robinhood, very strong stock that has really good performance. SoFi, we just traded it yesterday in my Discord community. Said we're gonna sell some more put options on SoFi, and it's been amazing. It's been just super profitable and easy for us to make money on. So yeah, just really excited in this market. I think there's going to be continued really great opportunities. Let's go back to Google right now, though. Let's talk about the ecosystem and cross-selling, because I talk about SoFi the business. You guys love it when I give you the deep analysis, and I've had several members join me recently on Discord, and they say, Henry, it was well worth it to join your coaching because not only have I made a lot of money, but I love your deep analysis and I like how you break down the companies that you invest in, your reasoning why. To me, that's worth it. That's why I paid to join the community, and that's why I know that I'm going to be obviously they're going to have a good time. Been coaching for a long time and I love it, but like I know I'm gonna have a good experience because of the way you break things down. So let me give you like the SoFi style here on the ecosystem and cross selling. You already know SoFi. You can watch that video. I made it 2 days ago. I always talk about the ecosystem upsell model. Well, Google has something pretty similar, and no surprise, every business does. So let's talk about YouTube. The world's second largest search engine, dominates in video plus ad revenue, and YouTube has figured out a really strong algorithm. So YouTube makes money from ads, right? So you're watching and then you get hit by an ad, and that ad could be really anything. It can be a advertisement for, for Apple, for Nike. It could be a guru trying to sell you a course, a whole like a product like a chair or whatever, right? It could be a whole lot of stuff. And the way that YouTube makes money is from the advertiser paying for the views that happen on YouTube. So YouTube rewards creators that can hold attention and that can also get views and gain popularity, which is a good thing because I always say that like YouTube's kind of like on the creator side, in my opinion, it's like a restaurant. You want to make a good product so people come back and eat more of your food. So if you have a restaurant and has good food, you're going to get regular customers that come in and, get the spaghetti with meatballs or the pizza or whatever, right? So they're going to come into the restaurant and eat more of that food on a regular basis because they had a good experience. So the same thing is with YouTube. As a creator, you want to put in the work, make good like for me at least, it's like put in the work, do the research properly, try to get good results, try to make these videos fun. That's why I say bicep over tricep. Most of you guys like that. It's because I hit the gym. For me, it's very important to hit the gym, and that's like more important than money for me now, right? Because once you have money, it's all about health and relationships. So I try to make these videos educational, fun, and then results oriented. So you learn something and you feel good after watching the video. That's good because YouTube makes money off of that, and YouTube pays the creator as well. I think like 55%, and then they take 45%. So YouTube makes money from the advertisements, and I think that's going to continue because nowadays people, it's a form of entertainment and education, and college is like overpriced and like borderline scam in my opinion because you don't really get the same results you used to get in 1950, and those results kept going down and the price kept going up. So like college doesn't make sense, and you can like learn everything online now. So YouTube is for education, it's for entertainment, and it's for like many other things. So I think YouTube's going to continue to do very well, and it's going to provide Google a lot of money. Now let's move over into cloud. So cloud is growing very fast, and it's critical in the AI data infrastructure boom. Google's going to make a lot of money off of that. And of course, they're going to continue to make a lot of money off of ads because ads are one of the highest forms of leverage in marketing to get more customers. They got YouTube and they got a bunch of ads. and they're not necessarily like cross-selling you into a new product like SoFi is, but they're cross-selling you into more videos to watch. So that's that. Now let's talk about the data advantage. So Google has billions of daily inquiries, giving it unmatched training data for AI. So like they have all the data, which again, I have a data analytics, finance, and economics degree. And for me, I'm always looking for opportunities within data. I think that's what makes me a unique investor. I think that's what makes me better than other option coaches, is because not only do I have more experience in field work at, Wall Street, Goldman Sachs, and other like real hedge funds, is just like I have a degree in data. And I think data is one of the key advantages that companies have. So funny enough, my data degree ended up being useful for me, right? Because yeah, it's just funny enough. I had I think it was like I think it was like 10 classes. I don't remember anymore, but I was taking these classes. They were freaking hard. Like I was programming in R and Python, and I'm not a coder at all. So I had to learn some really hard statistical language models, Python and R, for like data analysis and statistics. And I was like, oh man, this is super hard. I was thinking about dropping it because I already had good job opportunities. I already had like a lot of experience. I had a lot of experience. All I did in college, I was just studying. I did not party. I did not drink. I haven't gotten drunk since I was 20 years old. It's been over a decade since I've been drunk, right? So it was hard. I was like, I don't know, should I drop it? But anyways, I stuck through it, and this has helped me pick stocks. And I think Google is one of the next stocks that you should be invested in. Q2 revenue was reported at $96 billion, making 14% year-over-year increase. Amazing for a huge company with low PE ratio. So if you look at the valuation versus its peers, compared to Apple and Microsoft, like Alphabet is trading at lower PE ratios, translating to potentially much better value than both of those stocks. So for me, like the summary is they have amazing scalable growth, they have high profitability, their valuation is amazing, they have diversification, so they have cloud, they have YouTube, they have search, right? So very, very strong, and the stock is really underrated. It's one of the most underrated AI stocks that I believe is set to explode to $4 trillion giant. Like absolutely, no doubt about it. Just a matter of time. So hope this video was helpful. Hope that you like this analysis. If you want to join my community, hit the link in the description, learn more about it, and yeah, I'll just catch you in the next video. Let's make some money.